Welcome back to the channel. My name is Brad, and today is Roundhill Roundup. We're going to cover XDTE, RDTE, and QDTE. We're going to go over their calls. We're going to give you the projections for this week's distributions and next week's distributions. At the end, I'm going to give you some of my thoughts, some comparison charts, something to think about, and just expose maybe some of the risk that you may or may not know about. And if you are okay with the risk, then these funds are for you. If you're not okay with the risk, don't know what to tell you. We'll just get into it, and you can make your own decision. None of this is financial advice, tax advice, and legal advice. It's just Brad giving you his thoughts and comparisons and projections. First of all, how did I do last week? Well, look at there. They paid 23. I had right there at 23. They paid 23. I had them right there at 23. RDTE was a little bit higher with 28. I had them 26 to 27, but okay, that easily could just be the treasuries paying. I don't have exactly all that math sitting behind me, so I can only take a good guess. So I'm within a penny or so. Not bad. It does not, and this is the bigger part of this question, this does not look like it is they're giving you your money back. This looks like it's only the premiums and money from the treasuries. So that is exactly what anybody could ask for. Just your premiums and returning what the treasuries are paying. I think that's a good deal. Let's look at what I project for next week, because I had to make some changes, and we'll go over why I made those changes. So last week I said that XDTE was going to be 13 cents and QDTE was going to be about 14 cents and RDTE was going to be about 37 cents. And they grew share count. RDTE had a 23% share count increase. Now, I just need to tell you that because that's going to affect the projections. They could be as low as 30 cents. If I take the new share count compared to the old share count, it's 30 cents. The other ones, right there at the 13, it really didn't change them that much. Their share count grew about 6%, but that 23% share count increase on RDTE is all I'm projecting that, hey, that should affect the premiums this week. Don't know what else to tell you, but 23% is a large increase. So let's get into the calls. So first of all, I want to make sure that everybody is sitting down, and if you have a heart medicine, make sure it's next to you just in case you have a heart attack when you see some of these calls. Because yes, they are, some of them are that shocking. So let's get right into it. QDTE, they lost $5 million this week. They went through the strike price 4 out of 5. I don't know what to say. But anyway, volatility was clearly going down through the week. Their calls, distance amount through the strikes is about 1.4. Out of the money, they were all a little too close to being, at the money. So unfortunately, this is what happens. But you still get paid that $3.2 million, which is about 23 cents. That's interesting. And that's why I'm going to do the comparison charts at the end, so you can see how this actually affects and what do I mean by 1.4% this week. Now, if I move on to XDTE, well, XDTE has obviously been doing better, personal opinion, in calls than QDTE. So XDTE, they only had one go through the strike this week. The share count didn't grow significantly. Their amount of strikes did grow starting on Thursday and Friday, and that all looks good. I mean, they're only 0.11 past the strike. It was a profitable week. They're going to pay you that $980,000. Ends up being about 20 cents. I can't complain. I don't see too many complaints on XDTE than maybe QDTE. Now, everybody's favorite. Clearly, they're everybody's favorite because share count went up 23% this week. So how did RDTE do? Well, another great week for RDTE. None of their calls went through the strike, but you can see the amount of strikes that they're having to write, the amount of calls that they're writing significantly increased through the week. They went from 539 to 613. That's a lot of strikes to be writing and increasing. You can also notice the volatility through the week also declined. But at the end of the day, they did not go through any of their strikes. And that's a good sign. They're going to pay about 25 cents. And the reason it's going to be 25 cents compared to those 30 cents is just because the share count increased that 23% this week. If you would have went back to the old share count, you would have got an extra 5 cents or so. So keep that in mind. So what does Brad finally say for distributions for the December 20th? Right before Christmas, and everybody can use money before Christmas or Hanukkah or any of those other holidays that you may or may not celebrate. XDTE should be right around that 20 cents. QDTE should be right around that 23, 24 cents. RDTE is going to be that 25, 26 cents. Again, maybe a little bit more because of the treasuries. Any profits that they haven't paid out is going to get paid out now, because it goes by calendar year, and we'll see how that works out for everybody. I think this should be fairly good. I am still running my test and for the next couple years. Link above, if you haven't seen it, it's going to be a complete series. I didn't do an update. It'll be, the update videos would be on Wednesdays, and I saw the numbers on Friday, and they're actually not that bad. Both YieldMax and Roundhill. So kudos to both of them. Both of those accounts are growing very slow. But let's get into some of these charts and go through some of the explanations of my personal opinion and feeling about some of these going through the strikes and they're losing so much. Let's just talk about it. Let's throw it out and talk about it, and just making sure that you have all the information sitting in front of you so you can make a judgment call. Brad is not making a judgment call. I still think that these funds are good funds, but maybe a little more riskier than other funds, but they pay a higher premium. You got to make your own decision. Let's talk about QDTE. QDTE, November 11th, was 21% below QQQ. December 6th, they're now 24% below QQQ. You can see the Qs are going up and QDTE is not going up at the same pace. That, to me, that's a little bit troublesome, but I am a total returns person, minus my 8%, but I also look at pricing. And the reason I look at pricing is if QQQ decides to go negative, you're already down, and it's been very flat here recently for several months. It's been very flat, but you're already down, and any downturn of the Qs you're going to get. And that's just the way that it works. And that's why I like to see a little more price appreciation, maybe a little less risk. But these are a little bit farther out on that risk curve, and you just need to be aware of it. If I look at total returns, they're beating the Qs. So what's Brad complaining about? He's only complaining that the price, if the Qs go negative, then you really have to reinvest just to make sure that you're breaking even. Just making sure that you have all the information so you can make a judgment call. Nothing more, nothing less. When I look at RDTE, RDTE's the same way. They lag behind the Russell. They were right close at the beginning, then they had a little bit lagging. But you know what? It's not as bad as others, but they're still young. I mean, you're almost 8% behind. I mean, that's a significant number, but at the end of the day, you're slowly beating the Russell. So if you're beating the index, it's one of those good job, but a little more risk if there's a downturn. That's all I'm pointing out. XDTE, XDTE, not bad. 16% behind, just slightly above, 2% above, but S&P 500 hitting new all-time highs. You're not seeing a whole lot of price appreciation, but you are getting a decent yield. That's awesome. You're also beating the index. They are clearly beating the index. No question about it. Let's face it, the S&P 500 is up 18%. If the S&P 500 corrects 18%, you're going to be down 16% in that price, basically your NAV. But you'll still be beating the index as in total returns, but just make sure that you know what you're getting into. That's all these charts are trying to relay to you. Now I'm going to do a comparison to T-SPY. XDTE is 2.8 above on their price, NAV. T-SPY is almost 7%. So if the market takes a 3% correction, XDTE is now below your cost basis. T-SPY needs a 7% correction for you to be below your cost basis. They don't pay as much. 100% they don't pay as much. They pay 13%. So it is what it is. But they're lowering your risk and they can handle a bigger downturn than XDTE. It's all about what you want from a fund. I would like to see in a fund something that can take a correction. I'm a little skeptical of some of these other funds being able to handle a correction, but you are getting that higher percentage. And let's do one more comparison. You know that I'm a NEOS fan. I like SPY. Does not pay as much as XDTE, and they're just right there behind T-SPY, but they're in that 12, 13 maybe. So we look at this going, total returns, they're lagging. Clearly they're lagging, but that's what you get when you have a covered call. What's happening is 0DT options appear to be a better player for those investors. It's just how far out on the risk curve do you want to be? Do you want a higher percentage or do you want a lower percentage with a little more protection of your capital? If I look at price return, SPY lags T-SPY, but is also higher than XDTE. So that's that risk. Actually, this is really the first time I compared SPY to XDTE and how far they are on that risk curve. I'm going to say I'm still happy with it. I would love to see SPY a little bit higher on that risk curve, but I'm going to take it. I'm going to take the ones that pay me a little bit less, but protect my capital a little bit more. Just wanted to share these charts with you to let you know what I'm thinking, what you should probably take into consideration when you start looking at these funds. Clearly, everybody likes weekly. I can understand that. And if any of these funds were paying quarterly, I don't think any of us would really want to be in them. But when you look at quarterly takes a lot more to process and budget. So I try to stay away from quarterly. I like monthly. I can handle monthly, but weekly clearly makes it easier to budget. So to each their own. I think you can sleep good at night with all the funds. Really do. I just think that you need to understand where you are in that risk curve. Some people will take a little less risk, like myself, because I'm in retirement. Some people might want to take a little less risk and go to something even safer. Something by Goldman Sachs would be even safer than this with a smaller percentage. But that's everybody's own risk tolerance. And that's all it comes down to. So hopefully you got something out of this. If not, thanks for watching anyway. And until tomorrow, God bless.